today's training, we will be understanding very much of reconstruction of incomplete business records. So account reconstruction means rebuilding a business accounting record when the original books are missing, incomplete, poorly maintained, or unreliable. So let's switch to the third paragraph. The accountant determines what actually happened, classify each transaction correctly, and rebuild reliable accounting records. So reconstruction is not guessing or forcing figures to balance, not necessarily that, but every material figure should be supported by evidence. So there must be investigation of every numbers found on the documents the business made available for you to reconstruct their records. So let's see why we have to perform reconstruction for businesses. Common causes of this include poor bookkeeping, no proper recording, no previous accounting system, change of accountant, lost, damaged records, rapid business growth, heavy cash transactions. So these are some of the reasons why a business record are termed incomplete. So you collect every available document, organize them before you start reconstruction. So let's have this more slide. So let's see the processes, the stages, or what you have, what need to be involved while you reconstruct. So these are things you do. First, understand the business and how it earns, spends, and receives money. So the second one, collect and separate all available record by source because you are working with them. Establish opening balances. First, you establish opening bank balances because they must have had some balances in their bank from the previous years or previous period that there was no proper records. So cash, inventory that are available, the receivable of customers, payable of suppliers, the loan if the business had obtained a loan previously, fixed asset and equity. So we are reconstructing for this business, Mass Mart Enterprises. So these are the documents the business made available for the accountants. So they made available bank statements, then handwritten cash book. This is where they recorded their cash transaction, the ones they recorded, because necessarily not all. So also their transaction recorded on WhatsApp. So you can see them. So another document they made available is the suppliers. So these are their vendors. So these are the record they have on hand regarding suppliers. Then also customer. So this is customer ledgers, their customers. Then also their fixed assets record. So what they have on hand, they had office furniture and computer equipment as well. So the physical inventory, these are the goods or the inventory available at the beginning of the period. So we take cognizance of them. And also lastly here, the loan document. Okay, it means that the business took a loan from the bank. So the amount is 700,000. So and the interest is 12,500 per each month. So these are where we are going to extract the transaction that we're going to make in the reconstruction from. So, but one thing important is that as an accountant, you must avoid duplicates. So you have to ensure that you investigate every transaction. Okay, let's give an instance. Okay, Chinedu stores right up here. Okay, made payments. If we can see it in the bank statement, 350,000. So, but they have multiple records, the WhatsApp, cash, the customer record, and suppliers as well. So let's see whether this 350,000 appears somewhere else. So it's not in the cash book definitely because it's a bank transaction. Then here is the WhatsApp transaction. Okay, is there any 350 here? No. So the next one, the suppliers, is it here? No, we cannot find the 350 here. So I think the right up here is it at the customer ledger. So the payment was actually from a customer. So as you can see right here, the opening customer balance, meaning that they had receivable of this customer as he's owned the business, 350,000, and he made payment, right? So definitely he made it via bank because we notice it in the bank statement. So one thing important is that you must not replicate this transaction double times. That is why you must investigate to ensure that the number is not appearing multiple times, and even though they are, you have to select one in as much they are from the same source. So let's see one another, then we move further. Then also here we have Bright. Okay, actually from the customer record he made a credit transaction. He bought from the business an item worth of 580,000, right? He made payment of 300,000. So let's check whether we can see this transaction somewhere else. Let's check on WhatsApp. Okay, is there any such transaction? Okay, right here is it. Okay, Bright, right, made credit purchase of cement for 580,000. So we noticed the transaction right here on the WhatsApp. So, but the payment which he made is not here. Let's see. So how much was that? So he made 300,000 worth of payment. Let's see if we can identify it up here. Okay, it's not here. Okay, right here is it, Bright. So we see that in bank statement. So meaning that he paid using bank method. So the point here is that you must not replicate the transaction. Since it's appearing in double place, investigate to ensure that, okay, this record is from same source, meaning that you are going to record once. Okay, that's about that. Now let me take you to the next sheet. Okay, right up here are those transactions. I've already made extract of them so that we don't spend so much time doing them one after the other. So what I actually did was going through the statement, the record available, and picking out one after the other and ensuring that they are not duplicated. And even they are duplicated, I ensure I take only one. So the first thing I did was establishing opening balances, right? Because this is an existing business. They already had something in hand. So definitely they had bank balances because the account is not zero. And they also had cash because we are making reconstruction from January 1st, 2026, meaning that every transaction or the period of this account we are setting up is from January 1st, 2026. So prior to that, from the last year, 2024, 2025, 2020, previous years, so we are getting their balances. So right up here you can see the bank balance, the cash balance. Okay, let me show you that so that you see how we do that. Okay, here you notice the opening balance in the bank statement, 1,250,000. So that is where we got it from. So right here as well, let's see the cash. Okay, notice cash here, balance brought forward. So from the previous years, they had 180,000 on hand at the beginning of January 2026. So I ensured that I established every opening balances. So you can see it right up here. So at the stocks, you see that the cement spend they had on hand, they had a cement worth of 1.2 million and paint worth of 640,000. So let me show you that before we proceed. So you can see there. Okay, this is fixed asset. Okay, this is the inventory. From the source document they got from their record, I could figure out what they have. So I extracted them You see them right up here. So like I said earlier, first of all, you have to establish opening balances. So opening balances of cash and bank, of inventory, then the assets, equipment, this is what they had for the period. Then the loan liability. So I extracted them because these are transactions we are going to enter. But one thing I ensured was that I did not double pick one transaction. I ensured that I verify. So right here is the customer receivable. These are what the customer are owing in the previous years before they made such payments in bank and cash. So down here is where transaction of the 2026 started, right? So you can see right up transaction in the period of 2026. So we have this transaction that occurred this year from January till date. So we have their sales. Up here is purchases, so sales here, and here are general expenses and other transactions such as owners additional capital, then owners drawing as well. So these are what we're going to enter, but the point here is that the business ensure you get every available record from the business, whether WhatsApp, handwritten, bank statement. So next thing you do, you pick out extract transaction. Ensure as you do that you don't duplicate transaction like I just showed you a moment ago. So after that, you are going to establish balances, which are very much important because we are going to start by recording our opening balances before the transaction for the period. So that's about that. So now, since you've known how we done this, let's go straight into the Zoho book. So this is the interface. We go to the settings. So we're going to make some basic necessary setup. So let's set up our sales receipts. We're making use of cash sales. Then the fixed assets. So let's tick. Good. So let's save the setup. Let's return to the home interface. So let's take some settings again. Then let's set our VAT. So we select taxes. Right here is the setup, 7.5% already set, 0 rated. So let's see VAT settings. So the TIN is there, the TIN number and registration date. So it's necessary due to we are dealing on vatable commodities or goods. So save. Let's return home again. So another setup. So let's set items as our inventories. Let's activate it for sake of tracking. So because we'll be tracking our inventories. So I tick. The date we start tracking 1st January 2026. So let's save. Let's return home. So alright, before I do that, let me balance. Okay, let me show you something about chart of accounts. So let's go to the accountant. So chart of accounts are basically items of transaction that are peculiar to a particular businesses. Though Zoho inventory, Zoho book has an inbuilt, or most accounting softwares has as well. So what we're going to do in this training will be only creating the ones that are not here. So to do that, you select new, then you select the type of account, So let's go back to opening balances. So these are the balances we're going to impute in the Zoho book. So we have 1,250,000 for bank balances at the beginning of the period, then cash 180,000. So let's see some other balances. These are suppliers, customers. So definitely our customer balances. Chinedu was owing period this year 350,000, though he later made payments. The Royal Store. Then our fixed assets, opening fixed assets for the year. So we have office furniture and equipment. So these are the inventory, opening inventory for this period. So these are the balances we're going to impute. So right here is the loan document. So the business had a loan of 700,000. So leading to 12,500 interest. So these are balances that was brought into the new period we are reconstructing for. So let's see the extract. So these extracts are from those documents. So I ensure I pick them one after the other and avoiding duplicate of each of the transaction. So these are the balances, the assets, computer and furniture. So these are the loan liability, the customer receivable as customer owned last year. So these are the transactions for this particular year, 2026. So these are the current transaction. So after the balances, then we deal on these ones. Let's go down. These are the sales. So let's select opening balances. Let's go down. So we actually going to create some accounts. So 1st January, this is the period we are. So let's create a bank account. So we can also make our chart of accounts from here. So select assets. So there's no bank here. So we make new one. Select new account. Account type is bank because it's a bank account. Then the name of the bank access. Let's save up. So we build a start of account. Also be dealing with bank. So next one, let's refresh so that it appears. Okay, down here, let's see, it must show up now under bank. Okay, right here is the Access Bank. So the chart has been created. Let's see the balances. 1,250,000. So let's impute the balances for the beginning of the period. 1,250,000. So let's move on to the next. Then cash. So our cash balances, which is 180,000 for the beginning of the period. So let's open cash at hand account. So new account. So we'll probably have cash, but I don't think we have cash at hand. So let's make ours. Cash, a type of account, is an asset. Then cash at hand, you select it, and save. So we're going to impute the amount and the opening. I have 480,000. That's right. So let's move on to the next. So we have opening inventories, but we have to skip that. Let's deal with assets first before the inventory. So we imputing computer and office furniture. These are the amounts 450 and 300,000 respectively. So let's go to assets, select. So I think we have furniture here, so no need of getting it open. Let's impute the value 300,000. So there's no computer equipment, so let's build a new chart. Computer equipment definitely is an asset, fixed asset for the business. Then a computer equipment. As right up here, let's save. So next, let's impute the amount 450,000. That's right. So we done setting up the opening balances of our assets. Then let's move to the next. So here we have our loan liability. So actually the business had 700,000 naira worth of loan. So at the beginning of the period, it's brought into book and the interest of 12,005. So let's create a bank loan account as a liability. Under liability, let's select new account. So it's a liability, make it non-current liability. Let's draw down. Okay, right here is non-current liability. Let's select that. So let's give it loan. Let's save. So the amount collected 700,000 naira worth of loan. So that's that. Then we take the interest. So the interest payable. So we enter it as an opening balance of expenses. So let's go to, okay. Right here is the expenses. Let's select new account, because I don't think there's loan interest accounts here. So let's select new account. Definitely is an expense. So let's impute the name of the account, loan interest. So let's save the chart. So now let's enter the amount 12,000. 12,500. That's that. So let's see what is next. So I think we're done with assets and our cash and bank balances. Next is customer balances. So we have receivable at the beginning of the period and also the inventory of cement and paint available. So let's do them. Let's save up this. But we're going to make an opening equity account that will carry the balancing of those items or of those accounts we've created. So because this is an opening, so this is, let's create opening equity. So this is a carrying equity that balances all those transactions we've entered. So let's copy this. Let's drop it so that we have, basically this is a journal. So let's balance it. Okay. Right, let's hit. Absolutely right. So we are having a balanced entry, both the credit and the debit side. So these are the inventory we did on. So let's save up, continue. Let's confirm our entries. Right, okay. So let's move on to the next. Let's go to home interface. So this is the items. First, we have to create the inventories. So we have inventory of cement and paint. So we create them, then we make the opening balances. So first, what do we have here? We have cement worth of 1.2 million, paint worth of 640,000. So let's add up the inventory first. So add up cement, then the unit pieces. So let's scroll down. Let's impute the selling price because it's an automated system. So our selling price for the cement is 1,500. That's the selling account where. So next up, the cost price 1,000 for the sake of the training. Then we need to be tracking to know how many is left. So we select track inventory. So let's save up. Okay, inventory account. That's the inventory asset where it will be found in the balance sheet or the statement. Alright, let's set up the category because of the sake of tax. So the category in terms of whether it's a zero rated or vertible item. So it's a building stone product. That's what to select. So let's save up. Alright. So that's about that. So now that's the opening stock over there. So next is 120. So let's impute the opening stock. So the rate per unit 1,000. So we have this amount. All right. So next, let's impute another inventory, the paint. So let's select the unit as pieces. Right, so the next, select the category for the sake of VAT. So paint, let's move to the next. Okay. So the selling price 1,000. The cost 500 for the sake of this session. And we must select the track inventory so that we can monitor the quantity available. So the account, the inventory asset, that is where to be found in the balance sheet. So we save. Okay, so I didn't select the proper category of the item. So let's select here, make a search to see the one that is applicable. So which one goes for paint? Okay, select paint and vanish. All right. So all these things are so that it will be traced whether it's vatable or not. So we save up. Alright, that's absolutely right. Next, we add up the opening stock, what we have at the beginning of the period. So we had item worth of 640,000. So we input that right away. So let's edit. So the units, price, so that's that. So we've established the opening balances of our inventory, the paint and the cement. So let's adjust, because if you notice on the extract we made, there's a note that some amount of paint we have broken, that's damaged. So meaning that some of the opening items are not valid or are not fit. So we go to adjust them by reducing the balances. So we select, let's leave, then let's select adjustment. Alright, so we add a -5. -5, because the adjustment is reduction. -5. So you can see our, okay, the reason is damaged goods. So if you can notice, the quantity at hand has reduced. Convert to adjusted. Absolutely right. So that's about that, imputing the balances of inventory. So let's move to the next. So we've done this bank statement and cash, then our opening inventory. Then we're done with our asset, the computer and office furniture. So the opening balances of loan and interest, we've done that. So the next is the customer. So we had opening balances for customers, Chinedu and Royal Mart. So let's enter that. So we go to customer, select sale, see some drop down, then customers. So we add customers up. So Chinedu and Royal Mart. Let's create that. So let's select his opening balances. The amount he's owing us, though he later made payment. 350,000. So that's that. Let's go down. Alright, we need to impute the location of Chinedu, his region, definitely Nigeria. So I think that's that. So let's save. Done. So let's add up another customer, which is Royal Mart. Impute the name first. Royal Mart. So we select his region. The balances first. I think he has, okay, balance of 120,000. So let's enter the amount he was owing from the previous years. 120,000. So that's that. So let's enter his region address. Definitely Nigeria. Select that. Let's save. Absolutely right. So let's impute the payments they made. So customer payments received. So these are payments they made prior to the opening balances. You create new, select customer, Chinedu. So let's enter the amount he paid. Okay, here is it, 350,000. So let's enter that. So let's check out from our source documents to verify where we got those account money from. So you can see at the bank statement, Chinedu made payment on January 350,000. So it's verified. So we enter the amount here, 350,000. So that's that. Click yes. It should be reflected. Then we select date. Let's backdate because it's not today's transaction. That's January. Let's just, for the sake of our training, 5th January 2026, the payment was made. Select yes. So he made via bank. So Access Bank. So let's save. That's right. So let's impute another one for Royumat. Receive payments. Royumat made partial payments. He didn't complete the payment of the amount he was owing to this business. So Royumat, so this is the amount. He was owing 120 balance. So he paid 95,000 via cash. So let's impute the amount, 95,000. So let's impute the date. Let's take it back to January. Select 3rd. Let's select yes. Cash at hand, this is the account. Let's save. Absolutely right. So that's that. Let's return to the home interface so that we move on to the next. So we have sorted out the customer starting from the bank cash balances, the inventory, assets, loan, and customer receivables. So the depreciation, we are going to do it right away because those assets has lasted or have been in use for over 1 year. So we're going to appreciate the amount of depreciation it has had. So let's do that. First of all, we have to create an account for accumulated depreciation. So basically it's an asset, counter asset, select fixed assets, then accumulated depreciation. So it will be a parent account for the individual accumulated account, depreciation account. So let's save. So for the two assets, we are still going to create their accumulated depreciation account. Let's select new. Then let's enter the name. The types, definitely a fixed asset. Computer equipment accumulated. AccumD. So let's have it in short form. So this is the account that holds the amount of depreciation for computer at a particular period. So see the parent account, it will be under this accumulated depreciation in the balance sheet. Save up, that's right. So let's add up another accum depreciation account. So this one's for the furniture. So first of all, we select the type of account, fixed asset. Is a counter fixed asset account. Then let's put the name, office furniture, accum depreciation. Let's save up. That's that. So let's return home. So let's enter the depreciation. Absolutely, depreciation is an expenses, though non-cash expenses. So let's enter that. Let's select our date at the beginning of the period. So let's enter the amount of depreciation, 5,000. So this is the expense account. So page 2 would select the accum D account as computer. So it's depreciated at 5,000 on straight line basis. So each year it will be depreciated by 5,000. Alright, for the sake of this training and class, so next one, let's select for office furniture. So we date it back to January 1st. The expense account, definitely depreciation expense. Good. So the amount, I select, let's see what we have. Okay, 8,000 for office furniture. As that, select account as paid through the asset account as furniture. Let's save up. So let's return home. So the progress is on. So this is where we are. We are done with opening balances for bank and cash, done with the opening inventory, the assets, loan liability. Then we are done with customer receivable and their payments. So now we face the period, this period transaction, right? So these are the transactions for the period. So let's verify from our source documents and see whether what we have there and here are corresponding. So right up here, our suppliers, you can see mega suppliers supplied item worth of 760,000 of cement. Right up. So let's see the correspondence. So this is a payment we made. So let's select vendor. Let's input the name. First of all, we have to establish the vendor, mega supply. Let's input his region and country, Nigeria, definitely. Let's save up. Let's enter bills. First of all, you enter bills as is the supplies before any payment. So let's set up date, let's backdate. Let's put it January 9. So the item, cement. So let's select the quantity we got from here. Okay, it's right up there, 760. Let's save up. Okay, the country, let's select Nigeria. Alright, so it's saved. So this, that. So let's enter the payment the business made to this vendor. Mega supplier, let's enter the payment they made. The business made 500,000 naira worth of payment. Okay, we enter that. Let's go down. Select the date. Start date it. Select 9. Yes. So we pay through the bank, Access Bank. So let's save as paid. Absolutely. So we done that. This is a payment made to mega supplier. So the next supplier is prime distributor. So he supplied, we make payments by cash. The business paid instantly. So first of all, we are going to establish whether this number are verifiable from the source document. Though we've done that earlier, but for the sake of what we are doing, let's see where the amount appears. Okay, right up here you can see that prime distributor trading inventory purchase for cash. Okay, right up is verified. So let's add up. So let's select. Let's add vendor. It's not added yet. Prime distributor. That's right. So we must select his address, his region where he stays, Nigeria. So the important thing is that the transactions are verifiable and they are not duplicated. So let's save. Good. So now let's enter the bill number, then the date which you are backdating. We put it 10th of January 2026. So it's definitely as account payable for now. So let's select the quantity and the item we purchased from prime distributor. So the rate of the item is 5,500. Or let's impute the items actually. So it's actually paint. He bought paint. Absolutely, we've entered the quantity and rate. So let's save as open. Good. Now we need to make payments. Okay, let's pay them one after the other. Prime distributor comes first. So let's enter the amount. Okay, we paid instantly in full cash, 210,000. So, but we had to enter bill. That's how Zoho works. You enter bill, then the payment. So that's right. Then for mega supplier, so let's see that the mega supplier. Enter purchases, bill, enter vendor, mega supplier. Definitely Nigeria billing address. And let's backdate. That's that. So let's impute the items that he supplied the business. Business purchased a cement. He supplied cement. So the quantity 3,400, no, should be 340. That's the amount he supplied to the business. So let's save as open, as recorded. So that's that. Then the next transaction is prime distributor. Let's enter that. So we've already established those customers, so we are entering those transactions straight away. So from prime distributor, another credit. Let's enter that. So let's backdate because we are reconstructing what has been done previously. Alright, let's drag it down. Select the item, which is paint. Let's impute the quantity, 370 pack of paints. So let's save it right. Absolutely. Good. So that's that about that. Let's return to the home interface. So you see that we are done reconstructing the purchases. So the mega suppliers and prime distributors, which are the vendors for the business. So next are sales. So as you can see, we have Bright Venture. These are transactions for this particular period. So first of all, we have to establish those customers, the ones that are not registered. So let's select customer. None of them are registered yet, except from the balances. So let's impute Bright Venture. All right. So let's impute his address as mandatory field to fill. If you decide you can fill so much, but for the sake of this training, let's impute the necessary ones. So let's save up. That's that. So invoice. Let's add an invoice. So let's select Bright Venture. So let's impute the items he bought. So first of all, let's backdate. Okay, let's set it at 21st of January. He made. Okay, let's select item he bought. He purchased cement from us, from the business. So let's impute the quantity he bought. He bought 386. So that's that. Let's save. So that's this. The one important thing, we have to mark as sent, because an invoice, if it's not sent, it will not recognize in the account. So we mark as sent, meaning the customer is aware. So next, let's select receipt. No, rather it should be payment not received. Says receipt. So he didn't pay instantly, so he purchased on credit and later paid. So we rather select payment received. So we enter the amount Bright paid on payment received interface. So that's why I had to select payment received. Then yes, and the amount is there. The date he made the payment. Let's backdate. 21st January. Yes. So let's select where he paid through. Access Bank, that's right. Let's correct that. Access Bank. So let's save as paid. So it now reflects in his account. So that's that. So next one, let's add it. So let's add up the customer first. As Obinna. Obinna Stores. He's a customer to the business. So let's add him first before let's put address Nigeria definitely. It's a vendor within the country, a customer within the country. So let's save up. That's that. So let's input the date. Definitely we are backdating because we are reconstructing what have been done from the record available. So 28. Let's select the item he bought, paint. And let's input the quantity, the amount he purchased, 150. So let's save and send later. But when we send, we enter that, we are going to mark as sent. For the fact that we are not really sending it to anyone, so I have to select send later. So I'll have to mark as sent so that the transaction will be applied. Absolutely. So invoice has gotten a sent status. So that's that. So let's see the next. All right, we have a walking customer. This means a customer that came in, he bought and paid and leave. So not necessarily entering his name. So a walking customer here is the verifying document from WhatsApp and also in cash. So let's enter that sales receipt because the payment was made instantly. So let's no need selecting whether the customer name because he has no more business with the business. So the date 30th. Let's select the item he bought. She bought bags of cement. The quantity. So let's include that 180 pieces of bag of cement. So let's enter where the money goes in. He pays via bank. That's that. Let's save and send. Absolutely is created. So that's that about reconstruction of sales. So we've gone quite far. So now next remaining the expenses. So we have shop rent expenses, fuel expenses. We also have bank charges. So let's select go home. So some of these expenses we have to enter them because the Zoho system may not come with some of the expenditures we have. So let's go in here, select new. So this is the chart of account for the transaction, right? So let's see that. Let's select expenses because it's an expenses account. So let's tick here and enter shop rent. So because the system does not have a shop rent account, we made it. So shop rent. So now let's enter the expenses that was paid through the bank. So shop rent is how much? 120,000. 120,000. Let's enter that. So we pay through the bank, Access Bank, which will be credited behind. So that's that. Let's save up. Absolutely right. So the next, let's check out next expenses. Let's create new, select expenses, because the type expense is fuel account. That's that. So let's input the amount of fuel. Let's see that. Let's see amount of fuel he got. 45,000 naira worth of fuel. So let's enter that as an expenses. 45,000 naira. So let's select the given account, Access Bank. So let's save up. Absolutely right. So let's head on to the next. Select an expense account, bank charges. Absolutely. So some money that was deducted from the account, worth of 3,800 for bank services. So we enter them from where it was deducted, Access Bank. So that's that. Let's save up. Alright. So now let's see the next what we have next. We have owner's additional capital and owner's drawing. So the owner injected more funds to the business. So let's enter that. So there's an increase in his equity via bank. So let's use our journal. Let's do this manual. So let's enter the date. You do that. Let's select August. Or should we select March? So March is better. It's advanced. So let's put the narration. Additional capital. Yes, he added new capital. So let's select account involved. Definitely is equity and bank. So equity, or rather it's owner equity. Okay, it's right down there, owner's equity, exactly. So let's put the corresponding account. Now the payment was made from Access. Yes, sure. Okay, so right up there, Access Bank. So let's add the amount 500,000. No, it was debited to Access Bank. So that's that. We're having balancing figures right here. Let's publish them to the account. Absolutely right. So the next, okay, you can see the next one is owner's drawing. So the owner of the business took out amount in cash worth of 80,000 naira. So let's do that here. So let's still maintain using our manual journal. So this that, let's impute the date he took the money. So let's impute the account, drawing account as an is input. So we don't need to create this one, drawing. So let's enter the corresponding. So he took cash from bank worth of 80,000. That's that. So let's publish this. Okay, the narrate. Okay, let's see out what was in there. So they are filled within field, the notes as the narration drawn of cash from the bank. Exactly. So let's go. Okay, we have inflated amount here, 80,000, not 800,000. So that's that. Let's save up. Good. We are coming to end of this as we're running rapidly fast. So next, we done this, we done that. So I think all the transactions available have been entered, including the balances and the transaction for the period. So that's that. So now let's run through our report so that we see the financial statements. So that's that about accounting software. All you just need, enter transactions. In as much as you categorize all those accounts, all those charts, they have a way of entering where that is required of them. So let's select the date starting from 1st January. Let's run the report. Right here, this is it. So you see the total sale we have for the period, 999,000 amount worth of sale. Then the operating income, you see that same amount. The cost of goods sold, you can see that 643,500. Then their gross profit, 355,500. Then you can see our operating expenses, the bank charges, depreciation, fuel, and the rest. So that's that. So it's as easy as you could ever imagine. Alright, now let's check out the balance sheet. Right, so let's see what we have in our statement of financial position. So right up here are so at this period or at this time, these are what our balance sheet or statement of financial position has. Alright, you can see. Alright. So you can see our liabilities. Okay, you notice our opening equity right here. I think we have to move it to the owner's equity. It was actually an opening equity holding account for those balances, but we have established everything, a proper account now. So now let's transfer the opening equity to our equity, go to journal. So just the amount we are going to switch it to the equity account. So let's select the date we are doing this. Let's select as prior today. Then let's select the account opening equity exactly. So let's debit the amount that we need to transfer to our main equity account. So let's select the account owner's equity. So we are just making transfer, though they are the same classes of account, but for the fact that we had it initially due to the opening balances, so let's put it in a proper place. Right, it's balanced, so let's save up. Okay, let's put narration. Exactly, equity balance transfer. That's that. So let's save up and publish. Right. So let's go into report and see what we have. Okay, select balance sheet once again. Let's go down and see whether the holding balances of equity is still there. Right, it's disappeared. So we have every equity on owner's equity account. So this is the drawing minus 80,000 that was taken away from the equities. That's that. So these are the reports. So this is what it is. So now let's do one more thing. Let's check out our Access Bank. So you basically can actually reconcile manually by having your document or those statement of a bank statement. Then you match out whether those items in the system, in the account bank, Access Bank in the system, tallies with the one you have. So that's that. So you can see what we have in the bank here. So let's see if we can identify some of them. So this is how you reconcile manually. So you see the opening is right there. Then the payment of 350,000 is also seen. So right up here after the opening balance, you see 350,000. So you can see the balances, the 500,000 income for the business. So you can notice the debit and credit transactions. Absolutely. So that's that. Okay, you can. So you notice this transaction, the rent 120,000. See that? All right. So one thing we do now is to try and generate a report. So that's another fascinating or interesting thing with this. You can actually export your bank statement, your report on Excel sheet. So how do you do that? Click on export, then to Excel file. So we open that so that you see how it gets. So it's as straightforward as this. So if you really have other things you need to, other way you need to tailor them manually, you can actually export this report, write the financial statement to Excel document. So right here it is. So exactly what we have in the Zoho Book accounting software are replicated here. So that's that. So this all about the reconstruction of incomplete business records.